Hello and welcome to the Wendell Effect for the Indian markets on the 9th of April 2023. My name is Brandon Wendell. I'll be your host as I guide you through my view of the Indian markets. Just remind you, first of all, that we are not broker dealers or investment advisors. We're going to take a look at this information from an educational standpoint only, not telling you to buy, sell, or holding particular securities. Keep in mind, all the markets do involve risk of loss. It's always a situation, no matter if there's we do try to minimize the risk, but we can't eliminate it. And we're also not subject to trading restrictions. So we got a position in a security, initiate one at any time. And please stay in touch with me. If you have any requests or things you'd like me to talk about a little bit more, please send them into brandonwendell.cmt@gmail.com. You can also hit me up on Twitter. I'm pretty active there, at TraderBdub. And of course, please, if you could, hit the like button and subscribe, and maybe even the alerts if you want to be notified when I put out these videos on a regular basis. So thank you for your support. I appreciate it. Anyway, we'll go and kick this off and take a look and see. Last month was kind of a mixed bag. We had technology and energy minerals very, very red. Had a little bit of bullishness with the finance, especially HDFC Bank and HDFC. So kind of mixed. Last week was very, very bullish, however, for the Nifty. You can see green pretty much all the way around with a few exceptions there. So taking a look at the chart for the Nifty, you can see that we had on a weekly basis the last 2 weeks bouncing out of this little bit of demand, and we did dip just slightly below 40 as we made the low, so we may struggle to make a new high. That's telling me that for the next week or two we might actually pull back a little bit before we can break out to new highs. But ultimately my target is at 18,150. It's just going to have to pull back first before it can go there, so be aware. And we have already got a tested zone at 17,800. We kind of pushed down, and sorry, there's a storm, and you might hear some of the thunder in the background there. Anyway, you can see that we had that big move to the downside. We're retracing right now, and we have some stumbling blocks along the way. So either at the 17,800 or 18,000, we're going to get that push down. However, it should just be a small pullback before we continue to go higher. And on the 4-hour chart, an area you might be able to buy is actually 17,410. If we get that pullback, if it's just a very small one, it should just pull back a little bit before we bounce again. So kind of keeping an eye out for buying opportunities on the pullback in price for the Nifty. Now, as far as individual securities, Reliance is very, very weak still. We got a small bounce that's going on right now, but it looks like we're setting up for more selling pressure very soon at this 23.85. If we do go above that, again, in order to get above it, we're going to have to get more bullish momentum. So we need the RSI to go above 60 in order to be able to break that supply. If it doesn't, as we hit supply, expect prices to continue down from there. But if it does go bullish and we break through, this is already a tested zone, so we should go to the 25.50 area. TCS is on a small correction, but it too looks very bearish. As you can see, we corrected 50% of our recent impulse down, and are looking like the selling pressure is resuming. Earnings are coming up pretty soon, and it looks like it's going to carry us down, possibly down to the 29.50 area. Oops, sorry, I've got to move my visual there. Anyway, next we have Infosys, which also looks very, very bearish. You can see we've got a retracement. We had a positive divergence that led us into a little bounce. That's where prices made lower lows, but the momentum was moving up rather than down. So it looks as though we're done with our correction. Earnings are coming up next week, I believe. Keep an eye out for that, but it should push us back down. We don't really have any reason to go up. There's not enough bullish momentum, and it looks as though we're going to be pushing down towards that 1280 very, very soon. HDFC Bank, I mentioned that was one of the strong stocks last week. You can see the big bullish momentum carried us into positive territory as well, and there's no overhead supply, so it is possible for us to carry up to 1707. Also, earnings coming out very soon. So again, be very careful with all the earnings, and you may not want to hold a long or short into the earnings release. Wait for the news to come out and trade the reaction rather than trying to guess which way it's going to go. A lot safer that way. But if we do get a pullback, I would use it as a buying opportunity on HDFC Bank. ICICI Bank, on the other side, is looking the other way though. We were trying to push upwards. We are changing momentum a little bit, but we do have overhead supply here. So our projection at 894 to 907, that's in the zone, our projection is right in the middle of that 901. So we're going to run into a little bit of selling pressure, but this week, we should see some opportunity to buy as we push up to the 901. As a matter of fact, maybe I can go into a smaller time frame. Let's see here. If I go to my chart here, ICICI Bank, as we were just looking, but now taking in the 4-hour time frame. And remember, I was looking at the daily for a possible pullback. Now, bullish momentum really began at the close and the gap up. So, for the retracement, and then dropping down a smaller time frame, well, there's not really any great spots along the way until pretty much right here, the origin of the rally, and maybe even just that last candle as a possible buying opportunity. So it doesn't look great, but that may be the buying opportunity, 850, 875 to 848, targeting the 894 or really 900. It should be your target, 900 right there. And if I take this down a smaller time frame, just to see if there are any other demand zones along the way, looking at 60-minute, this might cause a little bounce. It did once, and we are trying to hold that area. See how we're flattening out? So we may try to bounce in this area as well. Again, the target would be 900 for a long, but you might have an entry around 873, we'll call it 874 to 868, placing your stop at about 868 even. So, getting back over to the slides. Nifty Bank is already bouncing, as you can see on the weekly chart. We stayed in bullish territory, staying above 40, so no strong bearish momentum, and we're bouncing. We retraced 50% and are possibly going to break this downtrend to the upside and head up towards 45,943. So expect a continuation to the upside here on the weekly. On the daily, we are going to pull back first before we rally more. I didn't really mark the zone quite right there, but you can see we're coming into a projection and also the origin of this gap and selling pressure. So expect a bit of a pullback there, and there may be a buying opportunity on the smaller time frame. Well, not really seeing one. Let's take a look. Again, go back to a live chart. And we'll go to Nifty Bank. There we go. And going into the daily time frame once again, this is our move that we're experiencing to the upside. You see the weakness that's coming in. The buying pressure really began on that green candle. So there are my zones for retracement. On the 240, I don't think we have any really good demand to look to buy. So let's try 60-minute and see if something shows up here. As a matter of fact, we might be able to adjust this. We're just looking for correlation and confirmation. As far as demand, well, there's a little bit of buying pressure that comes out of this area, but this is not a great zone. It's right around 40,560. And then the strong demand, unfortunately, is way down there. So it would take a pretty good retracement. But that is 39,662 to 39,775. So I don't think we're going to pull back that much. You can see we already bounced kind of in this area, which is 23% retracement. So I wouldn't be surprised to see us bounce from that area again. So I'm going to look to be bullish at around 40,800 again on Nifty Bank, and then target initially 41,412 and then ultimately 44,000. So some trade ideas that we're going to be following up on, as well as introducing some new ones. UCO on the daily, you can see we had a couple touches on this. This is one I put out back in February. We did bounce, didn't go very far. We went a little deeper, and you can see we have a divergence now where prices made much lower lows, but the indicator didn't. So while we're stumbling a little bit to get out to the upside, if we break out to new high, you could almost possibly go long on the breakout with your stop below the recent low. So wherever this high is, you buy that breakout with the stop below, targeting this 3620. Actually, let's get a little bit more detail here. So we go to UCO Bank. There it is. And I was looking at this on the daily time frame, I believe. Yes. So trying to find the details here. Again, if we start pushing upwards rather than down, there may be a new entry on the breakout of 2635, where you'd want to put the stop would be wherever the low is here. And let's put that in as stop loss, drop it down a little bit. at about 24.85 for the stop. So the long, again, would be on a breakout of that 26.35, and the targets remain the same. I don't know if there's any other kind of demand along the way. Maybe this is rally-based rally, but it's not great. If we drop down into, let's see, 4-hour time frame, it's still there as kind of a demand as well. So there still may be that buying opportunity right in this. With, again, this would be a little bit different for the entry and the stop. You're looking at about 24.80, 24.10 with a stop at 23.90. To be buying on the pullback to this area. And, well, you could take some profits along the way if you wanted to, right here for target number 1. Around 32.15. And then target 2, you can just hold on to that 36.20. So that's kind of what I'm seeing here on UCO Bank. Oops, went too far, and there we go. On IOC, unfortunately, we hit the target a couple times, never hit the entry, so I'm going to skip that. It's not likely to work out anymore, so pass. NTPC, hopefully you got long on that. We came into our demand zone. We stayed above 40 on the RSI. The problem was when we moved up, we made it halfway to the target, but couldn't go into bullish territory. So we are stumbling a little bit. Keep an eye on this. Probably move the stop loss up underneath this candle low right here. So you're looking at about maybe 174, 174.25 for your stop loss currently. Keep an eye on that. For a new trade idea, I have another seasonal move on ITC Limited 100% of the time, 100% winner. From April 10th to April 17th, we usually get a strong rally in this security. It goes up almost 3%. So looking for a buying opportunity on the chart on the 4-hour time frame. If we can pull back, there's a little demand zone at the origin of the rally that we recently had as we broke out. So possibly getting ready to buy on a pullback to 380.20, 378.50 with a stop loss about 378. My first target is 391.55 projection, and then target 2 is around 400. So keep an eye out for that. We may only go back to this retest of these highs instead of back to the demand. If that happens, you would adjust. So I'll go back to ITC and the 4-hour time frame that we're at here. What I'm referring to was this. Instead of pulling back all the way to the 380.20, we might only make it back to 384.40. And it's basically a retest of the breakout area. You see, there is definitely some buying pressure there. Now, as far as where to place the stop, if you go long on the retest of the breakout, I usually put the stop 1 ATR below the entry. So 4.53 is the current 4-hour ATR. And just to make sure I'm right, we're looking at 384.40 for the long entry minus 4.53 gives us a stop 379.87. 29. So we'll call it 379.85. And close, but not quite there. There it is. So that would be your stop loss of 379.85 if you buy on the pullback to 384.40. Now, as far as targets go, you'd probably want to go a little bit further. In this case, these projections are okay, but that's not going to give you a good reward risk ratio. It's only 1-to-1. So instead, you may want to target, this is target number 1. And then make target number 2 the next projection up here. And it may or may not hit it, so that's why you got to make sure you use some sort of a trailing stop along the way as well. And let me just clean this chart up so you can see what I'm talking about. Get rid of the other numbers that might be a little confusing along the way. 0. There we go. Actually, perfect. So the other alternative entry would be buying on a pullback to 384.40 with a stop at 379.85, targeting 400.45 and 414.85. All right. So that's pretty much what I got for you so far for this week. Got any questions? Email me, brandonwendell.cmt@gmail.com. Find me on Twitter @TraderBdub. I try to stay updated on that and tweet pretty much every day. And of course, if you could, please hit like and subscribe, as well as the alert button if you want to be notified for new videos that come up. As always, thank you for watching, and trade safe, trade well. Take care, everyone.